Hello, everyone. Imagine waking up to find your life savings invested in the stock market are gone. This is not a nightmare. It is the harsh reality for thousands of Indian investors who fell victim to scams and frauds. You must have heard about the recent share market scam involving Bollywood actor Arshad Varsi and his wife, which caused several investors to lose their money. Just yesterday, in another case, SEBI has barred Sanjeev Bhasin, a former director at IFL Securities, for stocks manipulation. These are just two recent examples of wide variety of scams and frauds plaguing the Indian share market. In this video, I am going to explain major scams and frauds of Indian share market and hope that by the end of this video, you will be armed with the knowledge to protect your investments from these scams. So these scams and frauds can be divided into five categories. First is the market manipulation scams. These scams involve artificially inflating or deflating stock prices through deceptive practices like pump and dump schemes, where fraudsters spread false information to boost a stock's price before selling their shares for a profit, leaving other investors with worthless holdings. Number two is the investment scheme frauds. These typically involve promise of unusually high returns with little to no risk, often operating as Ponzi or pyramid schemes where early investors are paid with money from new investors rather than the actual profits. Number three is the corporate or company level frauds. These involve internal deception within a company, such as manipulating in financial statements to show inflated profits or understated expenses to mislead investors and regulatory bodies. Number four is the broker or intermediary frauds. These occur when registered brokers or financial intermediaries abuse their position of trust, engaging in activities like unauthorized trading in client accounts, misusing client funds, or providing fraudulent advice for their own benefit. And the final type is the digital and cyber frauds. These involve exploiting technology to deceive investors, including phishing, creating fake trading apps or websites, spreading fake stock tips through social media like WhatsApp, Telegram, etc., and impersonating SEBI registered entities or well known figures. These scams are rapidly evolving with significant financial losses reported due to sophisticated tactics like AI driven phishing attacks and deepfake scams. Let us now have a look at each of these categories in a bit detail. So the first category is the market manipulation scams. This can further be subdivided into five types. First is the pump and dump. In this type of scam, scammers artificially inflate the price of a thinly traded or penny stock by spreading false and misleading positive information, rumors, fake news, expert tips, etc., through social media, emails, or fake advisory services. Once the price is pumped up and attracts unsuspecting retail investors, the fraudsters dump their shares at the inflated price, making huge profits. The stock then crashes, leaving other investors with significant losses. An example of this would be the Ketan Parekh scam of 2001. Next type of scam in this category is the insider trading. In this type of scam, individuals who may or may not have access to confidential, non public information about a company, for example, upcoming mergers, quarterly results, regulatory approvals, etc., try to use this information to trade in the company's shares before the information becomes public. An example of this would be SEBI's WhatsApp leak cases, which is still ongoing, the investigation rather. The next scam in this category is the front running. In this type of scam, a broker or an entity with prior knowledge of a large upcoming order from a client, which is likely to move the stock price, places their own order ahead of the client's order to profit from the anticipated price movement. An example of this would be Harshad Mehta, who was involved in several types of frauds. Next scam or fraud in this category is the circular trading or synchronized trading. In this type of scam, a group of individuals or entities coordinate their buying and selling of a specific stock among themselves to create an artificial impression of high trading volume and demand. This tricks other investors into believing the stock is genuinely active and desirable, leading them to buy. An example would be the Global Trust Bank case of 2000 and 2001. The last type of scam in this category is the price and volume rigging. This type of scam involves deliberately manipulating the price or trading volume of a security to create a false appearance of market activity or demand, often to facilitate other fraudulent schemes. An example would be the co-location scam at NSE in 2015. Now let's move on to the next category, and this category is the investment scheme frauds. This category can be divided into three types. First is the Ponzi schemes or the pyramid schemes. These schemes promise exceptionally high and consistent returns with little or no risk. They pay initial investors with money collected from the new investors rather than from the actual legitimate profits. The scheme collapses when the inflow of new money slows down, leading to massive losses for the majority of investors. Example of that would be the Sahara chit fund scam of 2013. Another would be the Pearls Agrotech Corporation Limited scam of 2014. The next type of fraud in this category is the high yield investment fraud, HYIP. In this, the scammers promise incredibly high returns from exclusive opportunities or secret strategies that are often too good to be true. These are typically unregistered schemes with no legitimate underlying business. An example would be the Speak Asia online fraud of 2011. The third type of fraud in this category is the advance fee fraud or the fees for insider information. In this, a scammer requests upfront fees, taxes, or personal information in return for guaranteed high returns, exclusive stock tips, or access to special trading platforms which they never deliver. There are numerous smaller ongoing cases reported to cybercrime cells. A fi- uh, there isn't in one single famous case, but countless small scale frauds involve individuals or groups posing as financial advisors or having insider stock tips. They charge a subscription fees, registration fee, or profit sharing fee upfront. This keyword is upfront for guaranteed stock recommendations that never materialize, or they just disappear after collecting the money. These are frequently reported to cybercrime cells. Let's now move on to the third category, and which is the corporate or the company level frauds. It can be of three types. First, financial statement fraud or the accounts manipulation. In this, the company management intentionally manipulates financial statements, for example, overstating revenues, understating expenses, creating dummy corporations, overstating assets, etc., to show inflated profits and mislead investors, analysts, and regulators, often to prop up stock prices. A most famous example for this could be the Satyam Computer Services Limited scam of 2009. Next fraud in this category would be the IPO fraud. This is manipulation during an initial public offering, such as creating fake demat accounts to corner shares intended for retail investors or providing misleading information in the prospectus itself. An example would be the IPO demat scam of 2005. This scam involved a syndicate creating thousands of fake demat accounts using forged documents like ration cards, etc., to apply for shares in various IPOs. Their aim was to corner a significant portion of the retail investors' quota in popular IPOs, depriving genuine small investors of allocations and then selling the allocated shares for a profit on listing. The third type in this category is the illegal fundraising. In this, companies raise public money through various financial instruments like debentures or deposits without following proper regulatory procedures or by circumventing SEBI provisions. The collected money is often siphoned off or misused. An example would be the Sahara India Parivar case of 2012. Now let's move on to the fourth category, which is the broker and intermediary frauds. This types of fraud can be divided into four. types. First would be the unauthorized trading. In this type of fraud, a broker executes trades in a client's account without their explicit permission or knowledge, often to generate higher brokerage fees, also called as churning. SEBI frequently takes action against individual brokers and brokerage firms for engaging in unauthorized trading on behalf of clients. This often comes to light when clients complain about unexpected trades in their accounts, significant losses, or excessive brokerage charges. The next type of fraud in this category is called as the boiler room scams. In this type of fraud, high pressure sales tactics is used by fraudsters, often through phone calls from unregistered entities, to peddle shares in speculative or fraudulent securities, particularly penny stocks, to unsuspecting investors. They push clients to buy stocks that are un- outside their risk appetite, leading to significant losses. Next type of fraud is the misuse of client securities or funds. In this type of fraud, a stockbroker or trading firm misuses clients' funds or securities by transferring them to their own accounts, pledging them for loans, or diverting them for other purposes. An example would be Carvey Stock Broking Limited scam of 2019. SEBI took significant regulatory actions, which ultimately led to the firm's collapse. The final type of fraud in this category is called as the dabba trading. This type of fraud involves illegal trading that takes place outside the purview of the recognized stock exchanges. Trades are recorded in a dabba, box, or a ledger, and no actual transactions occur on the exchange. This is unregulated and highly risky, leading to huge losses for participants. Example would be numerous raids and arrests by police across India, for example, in the city of Mumbai, Hyderabad, etc. Let's move on to the final category of these scams and frauds, and it is the digital and cyber frauds. These two can be divided into four types. First is the phishing, wishing, smishing. In this type of fraud, scammers attempt to obtain sensitive personal or financial information like trading account credentials, OTPs, passwords, etc., by impersonating legitimate entities like brokers, SEBI, through fake emails, calls, or SMS. This can lead to identity theft and unauthorized trading. Next type is the fake investment advisory service. In this type of fraud, unregistered individuals or entities claim to be SEBI registered investment advisors, often showcasing fake certificates. They lure investors with promises of guaranteed returns, zero loss strategies, or insider tips through social media platforms like WhatsApp, Telegram, YouTube, etc., or fake apps. They often ask for high subscription fees upfront or access to trading accounts. Next fraud in this category is the fake trading platform apps. In this type of fraud, scammers create fraudulent trading apps or websites that mimic legitimate ones. They entice investors to download these apps, typically APKs, promising exclusive services or assured returns. Once investors deposit money, the funds are siphoned off. Example would be the recent reports of scams like AskMen or Ask IC Pro in 2025 itself. The final type of fraud in this category is the social media manipulation or tips on social media. This involves spreading misleading or manipulative content on social media platforms to influence stock prices or lure investors into private VIP groups for fraudulent trading calls. An example would be Sadhana Broadcast Limited case involving Arshad Varsi in 2025. SEBI banned actor Arshad Varsi, his wife, and several others for a year from the securities market, citing their involvement in a pump and dump scheme related to Sadhana Broadcast Limited. Misleading YouTube videos and paid campaigns were used to artificially inflate the stock price, and then shares were offloaded at higher valuations. So these are the types of scams and frauds which are prevalent in the Indian share market. Now let us go through few ways so that you can protect yourself. So there are seven. steps or ways by which you can protect yourself. First of them is the verify registration. Always check if an entity is offering investment services, that is, brokers or advisors, whether they are registered with SEBI or not. You can check them on the SEBI's official website, which is sebi.gov.in. Next is be skeptical of guaranteed high returns. No legitimate investment guarantees high or risk free returns. If it sounds too good to be true, it probably is. Next is do your own research. Don't rely solely on tips from unknown sources, especially on social media. Invest time in learning about these scams and frauds and how you can spot them and prevent uh, falling victim to those scams or frauds. Control your greed. You are not going to get rich in a day or two or a week or a month. It would take time. Market is not a magic. You have to give it some time. You have to take intelligent decisions, sensible decisions, and give some time for your money to grow. Next is protect personal information. Never ever share your OTPs, passwords, or pins with anyone. Next is always check documentation. Ensure that you receive proper documentation for all your investments. Do not rely specifically if some advisor or some firm contact contacts you specially and give you some kind of special treatment, some kind of um, VIP access or anything of that sort. Always check that you get proper documentation for your investment. Next is avoid pressure tactics. Reputable professionals will not pressurize you to make immediate decisions. So, if there is anyone who is pressurizing you to take decisions quickly, recheck, think about it, do your research. And final point is report suspicious activities. If you suspect fraud, report it to SEBI or the cybercrime police on cybercrime.gov.in. Okay, so the conclusion of this whole video is that although the Indian share market offers incredible opportunities to make money, it also has several scamsters and fraudsters. They could even be amongst those who you admire in movies or watch daily on business news channels. Knowledge is your best defense against prevailing scams and frauds. Invest time and, if required, money to educate yourself. Stay vigilant and always verify before you invest. Your financial future depends on it. This is all from my side in this video. Thanks for watching it. Please like, comment, and subscribe to the channel. I'll be back soon with another video. Goodbye for now.